Hello and good evening, everyone. Welcome to today's webinar. I'm Min Hui from ProsperUS and I'll be your moderator for tonight. Thank you for taking the time to join us today as we talk about market outlook in times of turbulence. Now, I'm sure most of you know that there has been no life uncertainty during the first quarter of 2023 because of the implosion of the Silicon Valley Bank to the takeover of Credit Suisse. So this further emphasized the importance of diversification and why we should leverage on different instruments to profit from the market, which is the reason why I'm excited to introduce our speaker for tonight. We are currently joined by Wei Ren, a market strategist from CGS-CIMB with over 12 years of experience, and he specializes in technical analysis and macroeconomics. For anyone new to ProsperUS, we are a digital investment service catered for the digital natives. We create educational series so that you will be able to learn how to invest from the pros. Lastly, you can simply scan the QR code and follow us on our social media or Telegram to gain access to our bite-sized educational content. Without further ado, let's start tonight's session. Wei Ren, over to you.
All right, thank you, Min Hui, for the kind introduction. So I will just give me a moment, or I just share my slides. So just do a bit of housekeeping over here. So before anything else, before I start, I just want to thank you all for coming on the Thursday night. It's a public holiday evening. So thank you for taking your time to join me on this. So before that, I think I just want to do a sound check with all of you guys, whether can you hear me loud and clear, and then are you seeing my slides in the correct format. So if you are seeing my slides, and then if you are you can listen to me clearly, please press 1 into the chat. Okay, yes to both. Thanks a lot. And then 1. Okay, thanks, Angela. Okay, just waiting a few more to type in to make sure that I do not have any hiccups or anything. All right. Okay, thank you very much. So all right, so yeah, okay, so without further ado, I think I will just start out the today's sharing. So just want to run through my the flow of today. So as you all know, my style of doing this market outlook and webinars is more of an interactive. So I appreciate more question, more interactive approach. So you can ask me anything you want. So be anything related. All right. Okay. So without further ado, I think I will just start off with a disclaimer. So for the disclaimer itself, this is to say that whatever we present tonight is only for reference purposes and for some educational purposes as well. So it does not constitute any straight-through investment advice. So if you incur any loss as a result of listening after today's webinar, then please note that me and CGS-CIMB are not liable for any final losses that you incur. All right, so without further ado, I think let's go. So just today, I think the topic March is the same as what I covered last during the previous month in May. All right. So just that today I will just add in Japan. So why Japan? I think Japan, because it's a unique economy itself. Recently, Kuroda, before he ended his term in April, he actually widened the yield curve, the JGB bond, the 10 years, and then the predecessor actually has increased, continued the ultra loose monetary policy, trying not to rock the boat, and at the direction of Fumio Kishida, the current Japanese PM. All right, so then after that, I'll just go through some of the, I'll go through particularly on the Europe index. I think today the stock 600 did have rally, invalidating the reversal that we've seen yesterday, and as well as I think for the US, it's a bit unique now. I think all of the 4 block index, I think S&P 500 and Nasdaq and the Russell suffered the heaviest, and then followed by Nasdaq and then S&P 500. But the Dow actually managed to retain its bullish outlook. So with closing with an inside bar. So this is something worth looking at. And then after that, I'll just go through some of the stock counters that I find interesting, and then and then yes, I'll share my thought on Tesla as well. All right, so the macro environment, what are the key themes right now? So in 2023, I think much more is the carry forward of 2022. That we do see the market has a very strong downside all along from the start of 2020, 4th of January 2022 all the way to October. So we have a period of 10 months, a good 3 quarters of downside. All right, so one of the key things is actually rising inflation and interest rates, and then what added on to the heat is actually the collapse of SVB Bank and the Signature Bank plus Credit Suisse. Credit Suisse is not really a new story because of Archegos in 2021 and 2020 to 2021. Archegos actually made some losses, and then it affected Credit Suisse severely, and they did not do a proper hedge on this, whereas the larger banks like Goldman Sachs and JP Morgan did it. All right, so let's not divert into that. And then, but I think that's where we diverge on between the Feds and the ECB and the Bank of England. So for the Feds, I think they are still very keen on keen on putting interest rate on the high side. They are still really raise their rates, but it's at a slower pace. I think what are the key things that we are looking for is, I think, the liquidity market, how well the market is absorbing the liquidity supply, and then another thing is the job market, and as well as the PC number. The PC number did came down, so but I think both the countries, both the region, US and Europe, they came down. UK just is still on the high side on this. All right, so for the US, inflation for the 6% year on year, and then bucked the Fed inflation target of 2%, and that is far from the short term. It's good news for the stock market, which I will later explain the chart how it confluence together. But long term, I think that the inflation is going to be very, very sticky, and it's very far from over that we are going to maintain it. We are going to go down to even way below 4%. So what add on to the heat as well is the oil prices. So OPEC actually has cut supply and indicating a possible increase in inflation due to energy costs and etc. And then oil, once oil break above the $90 mark, I think that we can see that the trigger down effect will likely affect the consumer market. Likely we can see around June to July, we can see on this, especially when it's summer. All right. Excuse me. All right, so the key thing is, will rates remain on increase on this? I think the liquidity crunch, which potentially hurt other banks, and although it's still although it seems to be contained, but history do repeat itself. Like in 2007, Bear Stearns did bought over by JPM under guidance for the Treasury Department. Those who are old enough, I think, will still remember vividly on this what this happened. But after that, I think the collapse, and then Freddie and Fannie Mae, they want to do mortgages, and then followed by Lehman Brothers and then AIG collapse, and then almost collapsing after the Lehman Brothers. So if interest rate continue to rise, I think we are likely to see a risk-on situation for now. All right, so I'll say that the Fed will be cautious. So the rates likely, which you can see that bracketed up, which says that rates is likely to remain at 0.25% or 25 basis points. Next, so the job opening actually fall below 10 million for the first time. It closed at 9 million for the month of February. So it's indicative of a slowing economy on this. But I think one key crucial thing is, I think NFP, this coming NFP is going to report worse result. I think is and is going to shows slowing down employment market due to the ADP. So ADP was released yesterday, and ADP shows that the private sector did not expect the job fall below the consensus of economists. All right, so the next one is a very key thing. M2 money supply return will surge. All right, so this either will point out that the rates do remain on this at 0.25. Also, I think this one I need to highlight a bit is because while the M2 money is still flooding it, I think the money market funds is still seeing a surge in, rising into the reverse repo market. So what is the reverse repo market? I think some of you know, some of you may not. So reverse repo is basically what the financial institution, they have large amount of cash, but due to high interest rate, they are going to just tuck it into the in the Federal Reserve overnight to earn some interest. So it's like if they are not going to put into the Fed mechanism, then their cash will remain afloat. Will be they have a time decay on this quote unquote. So next thing is oil rise rose after APEC cut supplies. This is the only risk that that may give Powell the thing to increase the hike to 0.5 basis points. All right, so the pace of hike, I think it'll be timely. Powell, I think, will likely react accordingly to it to what the ground is saying. Okay, so next thing is like what I say, I'm going to include Japan. Japan is one of the key players, right, that may or may cause the global macro environment into a different direction. So Kazuo Ueda took over the reins from Kuroda, and like what I mentioned earlier on, if he is likely to carry on the ultra loose monetary policy, because Japan is on Japan's hands are like, why do I say so? First, during 2013 actually, when Abenomics started. Okay, so there's a very prolonged period of this ultra loose monetary qualitative QQE, quantitative easing, and ultra loose monetary policy. So you can see that Q1 and Q2 and the QQE actually rose 10 times more than what the Q1 and Q2 have. All right, so this is the thing that I think we are seeing a very shocking thing, and then there are some structural issues, like I think the population, I think money are flowing back into the pension funds, and then there's create an imbalance. I will go into that. I think we'll go into that. I think most of you will leave. All right. Further shock will be in the US, will force the Japanese to shrink their foreign investment. This part is tricky. Why? Because Japanese has a negative interest rate, so means that they can't find better yields out there. So what they do is they will have to transfer the yields to overseas. So they are repeating what they did in the 1985, after the Plaza Accord. They just buy overseas property all over the world. They're just throwing money to buy up Japanese foreign assets on this. So they have stopped renovation and stuff like this. So is the thing that we are seeing. So other than China, Japan is the largest holder of US debt. All right. So I think okay, wait. I think Japan has overtaken China in terms of US Treasury bonds debt holdings. All right, so this will be a very tricky situation right now. So if the SVB situation is not going to resolve, or it is going to fall further, then likely we are going to see the Japanese will shrink back their situation to put out a fire back at home. All right. So this is the start of the thing. This is taken from Financial Times. Net purchase of overseas long-term debt securities has been shrunk since the start of 2022. After the COVID, I think it has shrunk, and then they are going into the short-term debt. That's why you can see the inverse yield curve and stuff like this going on. So you can feel free to take picture on this, or you want to screenshot on this. Up to you. I'm cool with it. All right. All right. So next one is the oil price. I won't go into that. I think technical analysis point of view, short-term wise, we may see a pause at $81 and $81 to $84. Reason why is because we see a very strong gap up. I think there's some exhaustion after a strong spike. But I think, like what I mentioned, I think there's a possible that it break 90 and then go to 100. So once it go to 100, then the transition to inflation may take effect going to June and July period. And also July period is the start of summer. So there will be a lot of heating requirement on this. So last year we do see the heat wave going on. So it's like to push oil prices up going on. And I think on the side note, copper prices are going on to the high side as well. So do take note on this as well. So yep. So moving on, I think after covering the whole Japan, there's some global macro outlook, including China, including US, I'll go into Chinese. So the Chinese market, we saw some boom for the past few days, especially during the before the break of Qingming Festival. All right, so the Chinese government also has ended their 2 sessions. Chinese is called Liang Hui, and has already successfully cemented a new cabinet and key government official. Li Qiang, after the 2 sessions, within the 2 weeks period, Li Qiang came out and make his stance, and then go out and talk, and then voice his support for C. All right, so another phenomenon we are seeing on this, based on the Liang Hui, is that the Chinese market is leading an upside rally, while Hong Kong is having a temporary pause. I think Hong Kong is still struggling to break above the 24,000. Reason could be that the new government is trying to reset the economy, especially particularly the tech sector. So you know that Alibaba has been hit badly recently, but there's a chance that Alibaba may be poised to go up in the long term, which I'll show you in the technical chart. Why is it so? That Alibaba may be going on for a long term, maybe a very good long term place, as well as Tencent. Okay, so Chinese M2 money flow, I won't go much into this. I think most of you have seen this until you don't really want to see it anymore. I think so. All right, so first up, I think M2 money has shown a very strong, sharp increase, large inflow of M2 money into the market. Inflation rate dipped actually during the reopening, so it shows that and coincide with the China manufacturing PMIs, non-manufacturing PMI and service PMI. I think we saw a dip as well. So it convert the figures back into the inflationary pressure. So the only country that's not facing inflation is China right now. Last time it was Japan. Japan always struggle to break 2%. Break 1%. All right, but now they are trending up in the 41-year high, which is landing at 4%. They must be happy, but not. But this is not the kind of inflation they want. Is because the inflation is due to just sidetrack. The Japanese inflation is due to the what do you call it? The inflation is due to the oil prices and the shortage in supplies. And then another thing is import wise, I think yen weakening is not going to cost much. It's going to cost them a lot when they import. So export wise, I think Japanese is not showing a very strong figure as well. Okay, so sorry for the sidetrack on Japan. Just suddenly come to my mind. So PMI dip. So PMI was still performing better in the month of February, which I shared with you on the last month in the first week of March. And then there's a slight decline back to the 50 level. But all in all, I think the PMI is still sustaining above the 50 level. We're seeing some sprout above 50. So 50 is always the baseline for the what do you call it, for the PMI, for the PMI figures in China itself, as well as the UMH, all these figures as well. So we believe that the Chinese is taking time to pick it up, and all this. So just that the only threat is Taiwan, political issue and relationship with China and the supply chain of the semiconductor chips. All right, so China GDP expected to grow at 5.2%. They lowered the target during the 2 sessions. So it translates into something that this based on my own view. It's not from any report. It's just that after reading a report, I digest it. First, I think in summary, he is taking time. He may appear impatient, but he need to be solid. He need to be stable. So his style of capitalism, I would say socialism. He's more of a socialist kind of approach. May take a longer time to reset and prepare to grow. So his view is just reverse what Deng Xiaoping is saying on get rich is good and it's glory to get rich. Okay, so despite I estimate, I think double-digit growth for China back in 2013, 2012, where you can grow 11, 12%, is not likely to come back right now after during this prolonged period. And China do have some problems of its own. First, I think the Chinese government is facing some sort of tough what do you call it, population growth. I think nobody want to get married. I think you have a lot of like property scandal. Chinese is called 烂尾楼. So it's like unbuilt buildings, and then people, the citizen and the normal, the non ordinary folks in China still have to service the mortgage by buying those apartment that's built halfway. So this is a society that China will have. So this is the bad side of Chinese, the thing that you do have to consider, and it may be trickling in the longer term. So despite that, we keep on saying that China is the next target, China is going to overtake, but it itself has a lot of problem, and problem is housing, right? The shadow banking. I think when she take over, he's trying to climb out of shadow banking, but it's far from over. All right, so back to the technical chart. I don't know if you can see it clearly. So if you're on the phone on this, I'm so sorry. I think you can, I think this one will be streamed on Facebook Live. So you can use your PC to stream it and then by watching it. All right, so the CSI target, actually last month, I think I thought that you're rally up to 4,002 straight away. But unfortunately, I think it came down one more sell-off to retest the support at 4,000 level. But the good thing is after much accumulation below the support at 4,000, finally it went back up. So this time around, I think that today's closing, we are likely to see one more upside to go on to the upside again. I think this time around, I think if it's able to break 4,001, I think, and currently it has already break 4,001. It's likely to go up to 4,002. So the Chinese market will be open tomorrow, except for the Hong Kong market will close for the Good Friday. Yay! All right, so first target resistance will be at 4,200. All right, so Hang Seng Index, I think this chart is not updated yet. So we see, so Hang Seng Index actually saw a very strong upside. I thought you were going to break 20,800, but I think there's some weakness going on at 20,800 and then followed by a sell-off. Support wise, I think today this shows a rebound at the key level at 20,200. But I think that right now, if it fails to break 20,800, right, then likely we are facing one more downside to test 19,980 and 20,000 level, and that level will be a very good buy if you miss out on the previous one. All right, another thing on the indicator front, I think let's look at the DMI. So for the directional movement index, we saw a very trendless situation right now because for the black line, the ADX line is not trending. That's first. And then the blue and red line, which is the DM plus and minus, are confluencing into each other. So when they cross, I think it means that they are not going anything. So any upside is relatively a very short-term target on this. All right, so next one, the Hang Seng Tech Index. So Hang Seng Tech Index also, the chart is not updated yet. We saw some strong upside today, closing in, and then maybe we are seeing a potential break above 4,400 on this. Also, the Hang Seng Index do exhibit the same thing like the Hang Seng Tech Index. We do have this inverted head and shoulder. So I think the best case scenario or the worst case scenario is that if there's a downside, I think prices may consolidate further. but I think going into May, I think May is a period that we see a potential breakout on this above 4,000, 20,800, which is oh no, 22,400, and for this case is 4,810 for the Hang Seng Tech Index. Right, so moving on to the Europe and UK, I think the rate hike is still on. First up, I think Europe inflation dropped to modest 6.9% headline inflation, but core inflation remains stability high. I think slight in headline inflation is due to lower energy prices, but once fewer subsidies expire, we may see a surge. So, you know, Europe, I think headline inflation is down, but core inflation is still high. Okay, so also fewer subsidies, I think it's likely going to expire this month. The headline is not out. I think it has expired. Plus, with what is heading on to the heat is the OPEC prices, OPEC shock, supply shock, and then it has added more pressure to the oil price itself. So with the Russia and Ukraine war ongoing, I think the European Union, including UK, will have a trouble going forward for the into the summer heat. All right. May impact the ECB and ECB. But the one thing about the ECB is it will still continue a quest for rate hike. I think it's still standing at 3.something%, despite softer inflation at 6.9%. It came down from 8%. So good news. But you know, but UK will continue its quest for more hikes as the recession fear ease. And just on a side note, I think the pound actually went up higher on this. All right. So another thing is in Europe, I think what worried me is the property market, especially on the commercial property. So ECB is trying to prevent any withdrawal from their so-called commercial property investment and their REIT. So means that they are avoiding a run, some sort, I cannot think of a better word, but like a bank run on this. So they are preventing money being running out of very in a quick manner, like what happened to SVB, Signature Bank. So that this 1 trillion kind of euro sector could trigger a liquidity crisis. And this report itself, it says that it might be worse off than the 2012 European debt crisis itself. So we really have to, I think a lot of negative news has been surrounding us, but I think I'm still bullish on I'm a short-term bullish. I still maintain my short-term bullish sentiment on this reason why I'll show you on the chart later. All right, so both Europe and UK inflation. All right, so 6.9% drop. ECB still hiking up to, I think, 3%, more than 3%. I think their target is 3.6% on this. So I think for Europe, I think they are trying to continue on the high again. All right, the next one is Stock 600. I think upside is on the way. Yesterday, I think I wish I shown that yesterday, I think did have a shooting star and then came down, but the sell down wasn't strong enough. Then after that, this morning it appears to have a bullish candle. In fact, a bullish engulfing. And given the strong rally after our failed support failed rebound at 447.65, which I mentioned in March, it fails to materialize. Instead, it goes up all the way to my support at 429.31. Rallied in elevated manner. So given this fact, I think that this may be a short-term 5-wave impulse wave on this, and then attempting to break out of the inverted head and shoulder being seen over here. And if it successfully break out of Kumo, I think we are able to see $470 being the next target. After 470, I think there will be a massive exhaustion and then oversold, overbought once again. This is a typo anyway, and then prices will keep crashing down again for this. So why is this? So if we can go back to history, I think from October last year, is more of a 2-wave pattern instead of a 5-wave. So prices may come down all the way to 415, 420. before deciding on next move. So as time goes by, I will just update on the technical outlook for the stock 600. All right, so now we have come to the US. I think quickly we go through job data as we have seen. No hints of no easing. Is that the case? I think not. I think the why this title is because NFP is not in, so I maintain this view. One thing is because I think inflation has already taken a hit on the businesses. So companies are shrinking their belt, and then they freeze hiring for certain things. Bank, I think the SVB banks and create some ripple. Tech is laying off, so unemployment rate is likely to surge. This is based on my deduction. First, and then another thing, remember what I say about job opening data. It has already maintained 10 million mark ever since the day back. I think some of you have listened to me 2 years ago that I have been saying that the job data has been on the high side. All right, so people are not filling up, and then that's caused the inflation. So now inflation has peaked, has creeped up, and then is forcing the price mechanism to go into equilibrium. All right, so more supply and demand is coming to equilibrium. Not yet, but I'm hoping that will come. But when that comes, I think the market will see a lot of pain in this. All right, so indicating that market may be slowing, but all eyes on NFP and ADP. So ADP is out, and then ADP shows a very slowing market. So likely NFP is going to be down. So with this short-term wise, I think the market is going to propel higher. All right, and especially tomorrow is Good Friday. I think there is a chance that the market will rally based on a weak NFP. All right, job market. I think this is what unemployment, natural rate unemployment is at 3.6%. So once it's crossed 4%, I think the Fed will start to monitor rate hike situation. All right, so a bit on the job market and inflation. I think the Fed don't really care about this. My own deduction. The Feds don't care about the bank runs, bank collapse. They don't care. And based on what the Fed has already said recently during the crisis of SVB and signature banks and Credit Suisse, I think they already know that banks are going to collapse, but they did nothing. All right, just wait for the news to come out and then say, okay, our daddy is here. All right, so some jokes. I think daddy is here. Daddy has a lot of money, so daddy can open a facility for you to borrow as much as you can. Just take the money and then fight through the crisis. But I think Jerome Powell, their tone, his tonality, his speeches, all this is hell bent on reducing inflation rate. So once inflation is not coming down, he is hell bent on bringing down inflation, and that's really the Fed's motto. Right, some sort of Fed is run by the Rothschild family. All these let's just don't go with that. That one cannot be verified. So this is a bit of conspiracy theory. But if you know what I mean, yeah. So if you like conspiracy theory, you know what I mean. Okay, so ISM manufacturing shows strong contraction, and then like Chinese, I think both manufacturing and the services showing a dip below 50. So this is a very worrying sign. So if inflation is not good, I think this one will bring down the inflation slightly. So means that you will stop the pace of rate hike. For you maintain rate hike at 0.25% until the inflation go at a comfortable level at 2%. But it's going to take a very long time. So be it right now, I think on a side note, if you are buying houses in Singapore, private property especially, you are going to be in a pain, and I think property market is likely to go higher again. Although we see some cooling off by the government, but I think the property market is going to be not going to be very heated in the sense that it's due to interest rate environment. HDB loan is now lower than the bank loans. Can you imagine that? So inflation rate, I think pace of acceleration is still very sharp. Liquidity seems to be returning to ample money. Will I call this quantitative easing? Nope, I won't call this quantitative easing. unless the QE is consecutively run up above I think 2 trillion, then well 1.4 trillion, sorry, then I will consider QE, and interest rate is being cut, means that there is a massive QE going on. So right now it's just the injection of the monetary supply. So QE comes hand in hand with reduced inflation rate. So just to make sure you all know. All right, so few more slides before I go into the live charting and Q&A. So for the US, I think why I say that there will be one more bull leg up for the US market is because first, if we can look at this Bloomberg chart, all right, every time it goes below, all right, and then inverted is a signal, is a telltale sign that, hey, inflation, the yield curve is inverted, all right, and then it goes down, especially before the dot-com, it goes all the way down to between 1999 and 2000, before it reverse higher. And when it reverse higher after a few months, 2020 and near September 2000, then it came crashing down, and then rates, the yield curve keep rising up, going back to normal. Reason why is because people are starting to go into the short term, and then selling selling a short term, going to a long term during a recessionary period. All right, and then 2006 we saw inverted once, but not once but twice, and then it goes up way higher, and then triggered the Lehman Brothers crisis. All right, and right now, and then still very deeply inverted is currently. So back in 2019, I think in June, I was working in Phillip Capital. I remember this day that yield curve briefly inverted. In fact, it didn't really invert, so it touches zero, and then it goes up all the way, and then that's where COVID happens. Right, COVID happened, then sell down, lasted for 3 weeks, and then rally, and then until 2021 and 2021, the market is going to a bull market. Right now, the yield curve is very deeply inverted, and right now it has gone up. So once it crosses above zero, that's where the time you need to be very worried about the recessionary fears going forward on this. All right. Okay, so moving on, I think let me explain why I think the Dow Jones Industrial Average is going on to a very strong bull run. First up, I think is because many people are piling up onto the blue chip market, blue chip stocks. Yesterday we saw most of the tech. I think Apple came down a bit, Microsoft came down a bit, but you can see consumer staple and healthcare actually run up. I think J&J, P&G, Pfizer, Moderna all ran up. And then oil counter went up, energy counter went up. Then now I think utility also went up quite a fair bit. So J&J, Pfizer, all these are the top Dow constituents. So many people are buying the blue chip or the blue chips. So that's why the Dow is still sustained. So this is the latest price that we see. These are Dow futures. You can see that it's strongly, firmly supported above my resistance and support at 33,500. So I think there's one more upside, I think, to 34,200. And then that's where I think that there may be a temporary exhaustion. The sell in May and go away maybe happen at this region between 34,200 before coming down, and then upside to 35,000. And then in September, you just come down again. Due to a triple witching period. So you can see that during September period last year, I think it came down the lowest, and then it dropped all the way until October if it actually breaks onto 29,000. All right. So just want to know that I think some of you guys may familiar with the Dow theory. I think I've done this back in my old days, I think 2-3 years ago during the webinars, and I love to share about this. Last time it was Bloomberg, so now I'm really lazy, so I put it on TradingView. So the Dow theory, I think I think during 2018 and 2020, we can see that that it confirms the divergence, not converging enough, not confirming each other highs. All right, so I think it play again. I think this time around the Dow transportation leads a rally up, and then while the the industrial actually came down. So there's some sort of like divergence on this, and that's why it fairly dropped. So right now the Dow actually industrial is actually going up, and then the transportation is likely to make one more lower low. So if it don't rebound, then I think we are going down to the upside onto the 100%. All right, so that's all from my side. Just want to do some couple of stock pick on this. So just give me a while while I share my screen on to my, wait, let me see. Okay, let me see, where's my, yes, this is my chart. Okay, so let me log in. All right, so I have a few couple of stocks. So it's low again. All right, so couple of things. I think first up, I think the E-mini, Dow E-mini saw some very strong. Wait. Before I go on, can you see my Dow future chart? You can type one into the chat group, chat box, because I just want to make sure before. Well, I've done that a lot of time, and then people say, hey, your chart is missing. All right, so let me see the queue. Yay! Thank you very much. All right, so okay, so the Dow futures actually has already broke out of the Dow trend line. So if I may, all right, just can come back a bit. This is the start of 4th of January, which read the top divergence and then go all the way down to a corrective wave. Closes at 28,500 and then rebound onto the upside again. And then right now, I think the Dow trend is not really that of a very strong Dow trend. So I would say that we are still safe. All right, it's more like we have completed WXY. So if you take this flag and handle, this is actually the larger pattern of this corrective pattern. So fractal pattern, which I always like to see. I think we can see a very strong upside on this as well. So there may be a false breakout, so but I think that it will edge higher, like what I mentioned earlier on, to 34,200 resistance level before coming down again. My main target still remain at 35,000 region, if not 35,369 level, before embarking on another sell down. Reason why is because I think the high on last December did not break up, and then with this resistance at 34,400, I think that this level is likely to be broken due to multiple testing that during this period from last year 4th December all the way to 15th February, this period of 3 months. There was this pattern that fails. So if we see a true-way pattern down like this, and this circle is resemble the movement on this, so we are likely to see one more wave up and then making a lower low and then coming down all the way again. So any stock holding you have, I prefer you to I mean legit stocks, not options, right? I'll prefer you to sell on strength or sell into the rally. Means that as price goes higher, as it big book profit, just like how the institution will do it. All right. Okay, so next one, stock 600. That's how I don't think I need to mention anymore. So next thing I like to point out, I think what are the short-term trade ideas I'll have. So first up, I think we'll have this CRM. So I think CRM goes round. I think breakout. I think a breakout come down again, and then one more rally. So it came down again, but I think that right now, I think I will do a short-term profit until all the way to 206.15. Do a support on this. So right now, I think for if you want to do a leverage count, maximize your profit, I think you can go to wait, let me see. It's wrong again. Okay. So this is Tesla. So what CRM. So normally this by the way is CFD. And then I will go into the just now was 1 hour. All right, so I'll go into 1 hour and then I'll just do a buy, and then let me do just new trade by 180. By stop market by quantity, I buy 2. So and then place order, cancel. Profit, stop loss. Profit I will take, I think I'll put my stop loss first. So it's around 192, 192, and then I'll let the price no God. Market 192 by 312, stop loss 192. So yesterday this is a demo account, by the way. This is not my account. This is not just want to simulate the trade on this. All right, so just want to show you how the ProsperUS account is like on this. Okay, so on this, so wait, let me see. I think my com hang again. Okay, so yep, this one I want to share. First up, I think I'll go back to this chart again. Is because bullish flag upside, and then while we get, I will buy into the strength, especially after the Ichimoku shows a very strong support above the Tenkan Sen. All right, so I think I will just take profit. If you are not you are risk averse person, I will suggest 200. If not, I'll just wait until 206.15. All right, and then risk to reward, I think I put 192 just now. And then I think is relatively a good risk to reward ratio. So if even you lost, I think you'll just be going on to very I would say a very minimal loss that you have. All right, but just don't follow my trade. Disclaimer first, okay. How come I cannot open the Q&A? Hey, wait, can you help me see the Q&A? I think I cannot open the Q&A. I just want to see the Q&A, but I don't know why. Never mind, it's okay. Maybe I need to trouble you to look at me, help me to look at the Q&A as well. Because
yes, I put in a chat. Are you able to see?
Okay, no problem. Thanks a lot. So just go on to the next one. Will be on TSM. So TSMC, I think just want to see. I just want to think that there's a potential chance for TSMC. I would think I'll just buy a spot. I think at a lower price at $90.52, and then this one relatively a short one. I think first up, I think first profit taken, and then I'll go on to $94.07 over here. There's a very huge resistance over here. So if you see the larger trend, right, for TSM, all right, we can see that there's some sort of like a corrective pattern A, B. I'm banking on a last day of B, so there's a potential upside. If not, I think next support I will look at will be at this level, between this level. So will be at 987 to 85.59. All right, if everything fails. So this time round, I think I'll just buy the strength on this, and then wait for rebound to happen, and then go on to the upside again on this. All right. Okay, so next one will be on some of the Hang Seng. I just want to show you Hang Seng before I do anything. So Hang Seng Index, this is my chart. I think piercing line. So I think especially when it goes into long weekend, I think there are two trading. Friday and Monday will be the holiday for Hong Kong. So it is a very, very strong indication that the Hang Seng is likely to edge up higher. In fact, this morning I just bought some for contracts, of course using the demo and going on to the upside again. All right. Okay, so I think time constraint. I think I will just go on to the Q&A. I think FQ was asking. I remember the name. If I call your name wrongly, please pardon me, all right, because I'm looking at the chat, Ming Hui post. All right, so should we buy top US bank at the time from TS Factory among the 4 US bank, JP Morgan, Wells Fargo, Citigroup, and Bank of America? All right, actually, let's look at Citi. Okay, Citi, my colleague Jadez has already make a technical call on this. So in fact, he has already, since the day he has done it, he has already moved up quite a fair bit. Will be move up to 5% before coming down. I think right now, given this V-shaped rebound and larger like double bottom wise, I think it's safe to write out on. But I would say that it's going to have limited upside to 48.41. Upside is going to see the target at $51.81 on this. Okay. All right. Okay. So let's look at Citigroup and then JPM. But my favorite pick is still Morgan Stanley. So for JPM, I think we do see that this inverted, if we go down, we do see that this inverted head and shoulder formation going on. In fact, prices open up higher means that I think there's a chance that prices may break the resistance over here. I think more precise will be at $130 resistance. If it breaks, that would be great. And then short-term target wise, I will look at the next resistance at 136.84 on this. All right. Okay, so next one, wait, JP Morgan, Wells Fargo. Wells Fargo actually my next favorite as well. Been liking this stock quite a fair bit. Okay, so fill out of a gap, and then yesterday a bullish counter attack pattern actually happens. So this called what we call an island reversal. So came down and then being supported above this level. You see, it closes above the $36. The low over here on this price is $36.51, and then the closure above was $36.89. So it means that we do have a bullish pressure on this. So Wells Fargo, I think I will just add on one more position. Yeah. So how come my chart is so? So WFC. So I'll just do a CFD trade on this. So Wells Fargo, if you can look at that daily chart. So just came down. He has already came down a bit. I think wait, I got where's my here. So if you look at over here, this counter attack. This is the what I show you on trading view is this island reversal, and then it closed above this support. So it didn't bring back not much. In fact, it made a higher low on this. So I think that I will just do a simulation. I'll just new trade. I just buy on the market. I'll buy 3 lots, place take profit. Take profit wise, I think wait. Stop loss, I think I'll place over here at let me see. I think I'll place around $32.50. No, too low. Yeah, $32.50 lah. Okay. By the way, this is not live trade. This is just a simulation trade. Just want to say it over and over again. Okay, so 132.50, 32.49 to 948. Okay, and then buy and then confirm. Right, just do something on this. Okay, so yep. Okay, so and then JPM, and then which one do we have? Next one is JPM BAC. So BAC is slightly weaker today, but I think BAC, if you want to buy, I think it's possible because it's just trade up higher. Volume has been declining and gap up being supported. So these are V-shaped rebound like this. All the banks are displaying the similar type of upside. So for BAC, yes, and then one thing I like is Morgan Stanley. I think Morgan Stanley has the best outside of all. I think diamond bottom pattern, closing above the support over here, and then 1, 2, 3, 4, 5 A, B, and then one more C wave up to $92.56. All right. Okay, I think this is all for the banking question. Then next one will be Apple, Amazon, and TZA. Okay, so go to TZA first because never heard. Oh, this is the small cap back shares. Okay, I won't do the inverse ETF small cap. So why don't I do Russell? I think SK, I think you are trying to short the market, right? So that's why the small cap. So let's do the short small cap. So I think since it has gone down, so I would say that you can buy the no, don't buy the inverse right now because I just got a feeling that it was just ready before coming down. So once it hit the resistance, okay, just if you want to buy the inverse ETF, once it hit the resistance at 1799, or if it breaks below 1733, then you buy the inverse ETF and then get out as soon as possible because it's a decaying kind of mechanism for this. But Russell has been on a sideways market, so likely it's going to go on to the bull market as well. All right, so next one is Apple. A for Apple, B for boy, C for okay. So the tech came down again, Apple came down, but I think during market open, this level between 175 to 160 is going to be supported, and then there will be a next rally up to 172. I think that this selling level 168 to 172 likely to be met in near term. Okay. And Amazon. So for Amazon, very sell down, but I think given the 4-hour chart, I think we may fill out a gap over here at 97.37 or even lower at this level at 95.3. So let me plot it out so that you can remember the levels that we see. So first is this level 97.49 and this level at 95.65. This level, just take note because I think there's a potential rising wedge on this. Rising wedge on this, so it may break down and then fill up gap and then rise up to higher ground. So island reversal on this and then came down and then bearish bullish collective 1 2 3 4 5 1 2 3 4 5 A, B, and then C is over here. So this rebound over here may be a short lived. So try to trade with CFDs. All right. Okay, so Intel, yes, Intel has moved up. Has moved up quite a lot of potential upside. Okay, so Intel, right? Right now there is a potential upside. Yes, there is, but just broke out of the range. So it might move up higher to test $35.40 to $36 before reverting down. Will advise to wait out because I'm not very comfortable. If you know me, I'm not very comfortable chasing the high, especially with reversal candle like this. So and a divergence like this. No, I won't chase the high. All right. I rather if it goes up, it'll be a trap going up to 34.76 before reverting down. So I would rather you to wait at the $29.68 before buying on to the upside again. All right. So this is what my view is on the Intel market. All right. So I think that's all for the Q&A. Oh, Visa. Yeah. Thank you very much. Visa. Okay, so Visa, right? Long time I will see it, so I need to go into a longer term. So Visa has already broken out of this larger bullish flag. If I may plot out. Okay, and then he has gone up on the upside, but you know, resistance wise, this V-shaped rebound has already confirmed, but forming a three-way pattern down, upside is possible, but right now I think there is a possible that upside is maybe capped at 243.12. All right, and then but there may be a bootstrap coming down all the way to 221.43 on this. So for Visa, if you are in it, you may hold, but always remember to shift your stop loss to your entry price, like a trading stop on this. All right, I think ProsperUS do have this function, which is maybe I need to ask, but I think we have. All right, trading stop. Just if they do not have automatic trading stop, then you have to monitor every day. Oh, if this moves, then I'll move it up according to my. At least your stop is positive rather than negative stops. All right. Okay, so for back to Visa, I think upside is possible, but it will be likely to be capped. All right. This kind of situation. Looking at Dow, let me see. I think we are strong. Strong opening upon the London market today. So likely we are going to see one more upside on this. If it breaks this, then we might face I see 34,200 being met earlier. All right. Okay, so I think that's all for my sharing. So any more Q&A? All right, please type in. All right, please go in. No question left. All right, so if there are no question left, I think I'll just end off my presentation here. Pass my time back to Min Hui for the wrap up. And in the meantime, you can still, yeah. All right, so Min Hui, to you, thank you.
Thank you, Rira, for the wonderful sharing. So just want to give another quick shout out of our upcoming webinar with Paragon REIT. So just simply scan the QR code and then you're just register and you're ready to go. So I'll just leave it there for like a minute or so if any one of you are interested to sign up. Otherwise, thank you everyone for joining today's session. So if you want to give like a feedback for us to do better for our future session, just simply scan the QR code on the screen that I'm showing right now. It will be very helpful for us. Thank you everyone, and thank you Rira. Goodbye and good night everyone.
All right, thank you very much, Min Hui, and everyone for joining. So please share if we have the session, it will be likely next month. If we do have that, please like our Facebook page as ProsperUS, and then our YouTube channel as well. Just subscribe as we have more and more speakers onto it. So just give us support so that we can justify to keep on doing it. All right. So yeah. And then just leave it on the feedback form so that I can still continue to know where I can improve and whether we can continue doing it. So if you like it, please give a good comment. All right. Thank you.
Thank you.